Well, the Central Bank of Sri Lanka issued broad guidelines to a licensed bank last week to further strengthen the functions of already established post-COVID-19 revival units and reinvest those units as business revival units. The units will facilitate the sustainable revival of viable businesses affected by the recent macroeconomic conditions and ensure that the proper handling of the increased impaired assets of licensed bank.
According to the guidelines of the central bank, licensed banks are required to have robust business revival and rehabilitation policies and procedures to support the revival of businesses. Large banks with more than 50 branches may consider establishing units at branches or regional offices of banks. The fundamental viability of a business is a key factor for the consideration of business revival by a licensed bank. Guidelines further state that corporate borrowers who have outstanding credit facilities at multiple banks may agree on a corporate workout framework on a voluntary and mutually agreeable basis without court intervention to address financial business distress faced by them. The central bank also maintained that licensed banks are required to establish facilitating units by mid-May this year and be fully compliant with the requirements of the circular by July. The governing body said the setting up of BRUs is considered imperative to assist both performing and non-performing borrowers of licensed banks whose businesses are fundamentally viable to revive.